This is a very, very different world where nobody employs people if they can avoid it, because technology is so much cheaper and more effective.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul dives deep into why he's bullish on Bitcoin, the S&P, and gold for 2025. Let's catch him up to explore his insights and predictions for the market's future.
Yeah, I don't have any structural issues with the US economy. I think that bifurcation of the two different worlds people live in is real. You know, don't forget the average person is dealing with very high mortgage rates, very high credit card debt interest rates. They're dealing with still low cash flows from their regular businesses. You know, we're not talking about tech giants here who are changing the world. We're just talking about people who run small local businesses. It's still not great. And, you know, we have to get rates lower and stuff for that to happen. And the inflation, yes, the rate of inflation's come down, but the price is stuck. You know, it's still sticker shock every time you go anywhere for dinner. You're like, oh my God, how did this happen? These prices have doubled. So that's a real problem. And what we need is the economy to grow. Now, Trump and his team know this. Scott Bessent's somebody I've known for a long time because he was an ex-hedge fund guy, and he's a friend of mine. I haven't spoken to him for a while, but he understands what needs to be done, and that's we need to get growth. So growth to me is, yes, you need to get interest rates lower. Yes, you need to get the dollar lower. Yes, you need to stimulate the US economy. You need to deregulate the economy. So all of those things on a forward basis suggest that the economy will be much stronger. Whether GDP changes much below, trend rate of GDP growth roughly is about 2% or just below it. We've been trending higher recently. Do we go much higher? Do we have a few periods of 3.5% growth? Maybe, probable. When you have a new administration, there's tax cuts, there's all of that stuff. You tend to do that, and Trump is very driven by the economy more than anything else. So I'm optimistic. Do the Europeans manage to get their shit together or not? That's a different issue, because they are doing the opposite. They just keep increasing regulation, increasing tax, making it harder for people. But they have the difference. They have a social security net, so it's a different structural system. And then we do need China, because China buys goods from abroad. They don't just sell them to us. They also buy stuff from us. And if they're on their knees with their economy, they're going to be buying less goods. So we need the global economic system to get fired up. So we need the US Trump to do what he's suggesting he's doing and allow the Chinese to figure out what they need to do.
Bitcoin traders are gearing up for a critical week as the U.S. presidential inauguration looms, bringing with it heightened market risks. The U.S. dollar has surged to its strongest level since the 2022 bear market, creating headwinds for Bitcoin's price. Bitcoin, currently range-bound, fluctuates between $91,000 and $96,000, with analysts anticipating potential surprises around the January 20 event. Key macroeconomic data, including the Consumer Price Index, CPI, and Producer Price Index, PPI, are set to influence market sentiment as the Federal Reserve maintains its hawkish stance. The Fed's reluctance to ease interest rates further strengthens the dollar, a development that weighs heavily on risk assets like Bitcoin. Despite these challenges, traders are keeping a close watch on key support levels, with many speculating on a possible drop below $90,000. On the brighter side, Binance's buy/sell ratio reveals a weakening in seller dominance, signaling potential buying demand. Additionally, Bitcoin inflows to exchanges have significantly cooled, suggesting that many investors prefer to hold their assets amid market uncertainty. As Bitcoin consolidates, traders and analysts alike are hopeful for renewed bullish momentum. But the week ahead remains crucial for determining the cryptocurrency's next big move.
The economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US, as the best guide. has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK is a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody. The economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK is a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody.
JP Morgan CEO Jamie Dimon has once again voiced his skepticism about Bitcoin, describing it as an unhealthy investment akin to smoking. Speaking with CBS News, Dimon reiterated his belief that Bitcoin lacks intrinsic value and is often exploited for illegal activities, including money laundering and ransomware. Despite acknowledging that a form of digital currency will likely emerge in the future, he remains particularly critical of Bitcoin. Bitcoin itself has no intrinsic value, Dimon stated. It's used heavily by sex traffickers, money launderers, ransomware. Drawing a striking comparison, he likened buying Bitcoin to smoking, a personal choice but one he believes is unhealthy. While Dimon supports blockchain technology for its efficiency in transferring money and data, his reservations about Bitcoin's legitimacy persist. Interestingly, despite Dimon's criticisms, JP Morgan continues to invest in Bitcoin ETF, signaling the bank's recognition of digital assets' potential. Dimon's comments highlight the ongoing debate in traditional finance over cryptocurrencies, with opinions divided on their long-term value and risks. His stance reflects a cautious approach, even as the financial world increasingly explores the possibilities of blockchain and digital currencies. Arthur Hayes, co-founder of BitMEX and chief investment officer at Maelstrom Fund, has expressed strong criticism of MicroStrategy's Bitcoin investment strategy. During an interview with Benzinga, Hayes predicted significant challenges for MicroStrategy once Bitcoin's volatility subsides. He pointed out that the company's approach relies heavily on issuing convertible debt to fund Bitcoin purchases, which works well in a volatile market. The stock and the Bitcoin they purchase are volatile, making these instruments attractive, Hayes explained. However, he warned that when Bitcoin's volatility decreases, likely after a major crash, MicroStrategy may struggle to generate interest in such debt instruments. Despite Bitcoin's recent 50% rally, driven by Donald Trump's presidential victory, Hayes remains skeptical. He emphasized that he would not trade MicroStrategy stock, suggesting that there are better ways to profit from Bitcoin's movements. MicroStrategy, led by Michael Saylor, has become synonymous with large-scale Bitcoin holdings, but Hayes' comments underscore the risks of this volatility-dependent strategy. The debate over Bitcoin's long-term value continues, with critics like Hayes questioning its viability as a foundation for corporate investment. Meanwhile, MicroStrategy's fate hinges on whether Bitcoin's volatility remains a reliable pillar for its financial operations. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.